Hey guys, this is Curtis. Just a short blog post here. You want to kind of follow up on what I had yesterday. Here you see my NTH layout. I have rhythmic DOM on the side that I use for order execution right now. Came in and executed, hit my 70% win ratio, and now I'm just I'm finished for the day. I've already hit my targets and locked that in. So looks like the day's getting weaker, which is just another maybe another good reason to not be focusing too much on long trades. Although it is having a last little pull up here, but it looks like overall the day's been weakening over time. But what I want to talk about today is why. Okay, and this is kind of a continuation of what we were talking about in the last video. But if why is so important. So, for example, if you ask me why automated trading, I can give you a lot of good reasons. I can say, okay, it's time efficient. You can automate your trades. You can execute them faster. That's one reason I built the Beyond Bot. And the best trades that came in today actually were so fast. Either I was lagged or it was really that fast. It's just hard to believe. It moved about 10 points. My best signal, actually, I didn't take it because it was so fast. If I had automated that in Beyond Bot, or just automated it in any way, presumably the computer could have taken that because it executes a lot faster. And I don't know if there would have been slippage on that or not. Usually, there's not. Typically, been interesting to know if there would have been slippage. Usually, there's not abnormal slippage because it's so fast. It executes in milliseconds. But right, if you say, well, automate trading, time efficient, you can automate trades, you can execute faster, you can execute, you can more consistent, you can trade around the clock, you can trade more signals, you build up your signals. And simply, when you look at a portfolio of systems, one system, may not perform as well as I can trade or may not see as much stuff, but when you can automate a portfolio of systems, it's just impossible to trade that. It would be impossible for me to trade so many different ideas, and I've seen this. And so you can, it's cumulative. One thing I like about systematic trading or whatever is cumulative. You can iterative refinement, scientific method. There's a lot of good reasons, right, when we talk about automated trading if it's done properly. And that's why I'm trying to build up my automated portfolio, because I want that. Regardless of what else I'm doing, I want that automated portfolio because why not, right? You can make the trades very selective. You can make them. So that's, this is very clear. And then we have to say, why discretionary trading? Why discretionary trading or why not fully automated, right? And one topic is you have a unique trade or situation. And a good example of that is I have a thesis that Delta Airlines might recover from this COVID situation. So I'm looking at potentially building a stake in Delta Airlines for a hold, for a position trade. And that's a unique situation. It's not based on the technicals. There are some technicals I'm looking at in specific to that picture. So there are technicals, and actually there's one of my biggest theses is just technical in nature. I don't want to go into it in detail, but it's a unique trade. It's a one-off trade. It'll either work or it won't. It's not something that I'm going to be repeating necessarily. It's a unique situation. Okay, so that kind of makes sense. But what about if we're, day trading or actively trading? What's the reason? Why are we trading with discretion? And this is a very important. This is very important that we answer this why. Now I thought about before. I thought, well, okay, maybe it was self-actualization. Self-realization. Trying to realize your ability as a trader. Okay, but that's not really. That's not too objective. That's not too concrete. And I was thinking about it, and for my case, my initial success. This is really what it came down to for me. My initial success was in discretionary. Was highly discretionary trading. Okay, and I had a strong confidence / ability in reading markets. And shortly after that, I developed my first successful systems as well. So, and one of the reasons I did that is I don't know that I could actually, it just felt so discretionary. The biggest problem was we didn't know, I didn't know my error rate. And so without knowing that, you can see you're very accurate or very precise, but without knowing your error, you don't know how much to bet, so to speak, unless you want to just trade very small. And that's the case in any regards. But this is kind of in the back of my head. If this was the reason, right, that I felt I could have success in trading, then maybe not doing this would not carry that over. So this would not carry over. And so this was kind of back in my head. But really to formulate it even further is in the last video, I said basically, right, when, let's just go even further and say when, basically when I have a high confidence or a strong thesis on the market, it tends to do that. Okay. Now that doesn't mean I can predict the market, and people misconstrue so many things that I've said in the past or say doesn't mean I can predict the market. Just because if I say, hey, I can predict the market or I can call the market, doesn't mean I can call it at any market, anytime, any place, anywhere. It just means that, hey, once I have a certain level of understanding, a certain level of confidence, then that market tends to do that. And this is the real reason. I mean, this is it. I mean, to me, this makes the most sense. If you're trading with discretion, as you have this or believe you have this, and if that's the case, you see, this is not in automated trading. There's nowhere this is in automated trading. There's nowhere where there's a confidence or a thesis where that's in automated trading that does not exist. There is no knowledge, so to speak, of, okay, he thinks this will work and therefore it will work. There is none of that there. Okay, just notice it's all you have your ideas, you test them, you refine them, and you put them to the test, right? And you can certainly, and I've developed many ways of filtering trades as things in an objective way, but there is no subjective. This element is not there in automated trading. Okay, so this is what we want to focus on. This, as I said in my last blog post, this is the most important aspect for a discretionary trader, is being able to develop a confidence or a thesis or a bias on the market. And when they have that bias, for it to correlate with the actualities of the market. This is your reason, right? This is one of your primary reasons. There are some other reasons. For example, maybe you can detect patterns that are too complicated or difficult to program. And that's true. Certainly when you read the tape, it's difficult. It's not impossible. There's so many traders who misunderstand what is possible. And any method today can be automated. Any type of method you could come up with could be automated. With the machine learning, deep learning, there's in the past, you could say, okay, these patterns are pretty difficult to detect, but today it's just a matter of will and having the right people who have the right background to do it. So there's nothing you can't really automate. And don't believe people say, oh, you can't test this or automate this. You can be. It may be difficult. Some things are very difficult to test or automate without the data. Like if you want to test, certain things, you may need order book data. You may need tick data going back, further in history. So it can be difficult. It may not be possible for you, but you can be assured that somebody can test whatever it is you're doing. A good example of traders who say their methods can't be tested might be like market profile. They say it's not an indicator. Well, it is an indicator. It's in the past. The market profile, just like everything else, is a past calculation. It's a relational calculation. So, if you're looking at market profile, say I'm not using an indicator. You're using an indicator because you're comparing. It's just a simple comparison, right? Let's say you say, okay, it's the market at the high volume today, right? That's the relation to close to the high volume. That's a difference comparison. Now, you may say that's not an indicator. It's a calculation of the market data and could be made into an indicator. That distance to the high volume node, right? So everything can be automated. Everything can be objectified. And there are some things that are more difficult to to objectify patterns in order book, very complex, visual patterns, but certainly with deep learning, certainly with machine learning, and someone who has enough experience in the right data sets, there's nothing you can think about that could not be tested and automated. But some things are certainly difficult for the individual. Might be too difficult for you or for even me to back test, but certainly it can be done with the right team, the right information. Just rest assured it can be done. But this is another reason, right? So it is a valid reason to say, hey, we're not saying that it can't be done. It just may be too difficult for you to program, right? But when I really think about it, this is really what I think about is the key to a discretionary approach, right? This is the an active approach. We're not talking about one-off trades or things of that nature. Unique trades, unique situations. This to me is really having that confidence, and so that's what we really want to focus in on. That, develop that, and prove it out, so to speak. You want to have a process for improving that, for developing it. If my thesis is correct, that hey, this is the only reason, right? That the only real or primary advantage is this right here. Then this is what we want to develop, right? Here we see a signal just popped up. I'm not going to be taking it. Be interested to monitor it and see what it does. Market looks a little weaker. Maybe I would be more aggressive in taking that profit target. Okay. So and we see that it's came back. It hasn't broke, but it's just testing, and we'll see what happens here. Okay. Looks like it's going to hold. Great. So we have an opinion. On this signal, I actually don't have much of an opinion. It was something I programmed up quickly to give myself that structure I needed. And so I don't have a lot of experience with it. But when we talk about our opinion on the market, or it needs to be an expert opinion. So when we think about what we're doing, it is kind of a guess. It is just opinion. But the difference we want to be an expert opinion, not just any opinion. And we do that by studying these trades, see how they work. My opinion right now on this signal is not expert because I'm not studied it. I have very little experience with it. I don't really know much about it. But over time, the whole idea is you become an expert on, you develop an expert opinion on markets, and be able to discern. This is the thing, right? It's one thing to be able to do this. Meaning by do this, I mean by being able to have a high win ratio some of the time, right? The ability to say, okay, you're winning 70% of the time, or but what we need to do is be able to stay out of the bad trades too. So this is very key, is avoiding those give back trades, those bad trades. And maintaining this, because the reality is, if you say, okay, yeah, this is true for me, and when I have a high confidence, my trades work too, and you're not making money, then something is wrong. Either you're taking a lot of trades that are low confidence and losing money more than you make on your high confidence trades, or sometimes you're wrong, and sometimes your high confidence trades are not winning like you think they are. So this is and sometimes that's the case. And when you get stuck on an idea, you can have correlated trades, correlated losses. And that's something to be avoided. We want to try to avoid that, because the whole idea of when we extrapolate some idea from a specific win ratio, it infers that the events are independent and non-correlated. And so if you start to correlate your trades, even if you say have a certain win ratio, certain extrapolations based on your wins and losses may not apply. And if you get stuck on the one idea and you keep trying it over and over again and you lose over and over again, well, that just going to throw your odds out the door. So this is why I believe in objective criteria as well. Not just a subjective, because it's so difficult to implement that. It's so easy to fool yourself, right? That you do have something is in the market when it's not. And you've seen here, there was something in the market. We see a great move up from that signal. It went down and tested, never broke the low. So that was very nice. But that was an objective thing we could see in the market. It was a +2. Don't want to make this too long. because this is really what I want to talk about, is the why. Understand your why. Maybe your why is different. If you can give me a better why, and maybe even clarify my thinking more, then I would like that too, is maybe there's a better why. But this is what I'm thinking about it, is the why is right here. And if that is the why, then we want to focus on that. We want to bring it to light, so to speak, and really, put it to the test, see that it is true, and make it more so, right? And that's the answer. So you have all these advantages of automated trading. But what you don't have is you don't have an ability you don't have that factor of, I see the market, I kind of understand what it's doing here. This trade is more or less likely to work, right? Whereas that in this, I don't like to call it pure discretionary, because I do think it should be a hybrid, right? I don't believe in pure discretionary trading for the most part. But with hybrid trading, we can say, you're doing some things that are objective, but you still have this ability to incorporate this. And sometimes it's not going to work out. For example, I was kind of in this trade here. I was kind of bearish down here. I would have been more risk averse and taken that probably that quick profit, which is fine too if that's the goal. It's not necessarily to capture the big wins. One other thing with the why, right, is when you're, examine also your trading habits and see why you're doing certain things. So one of the things I was doing was feeling a need to trade a lot. And when I examined why, there was a couple of reasons for that, right? One reason was because I wanted to get better, I wanted to improve, right? You can do that on the sim. You don't need to be doing that in the live. The other reason was because I was risk averse, right? And, I could trade certain ways and more high frequency, just take little scalps. And that was the reason that I was doing that. And it wasn't productive because I wasn't even utilizing my ability to read markets. So understand the why behind your trading activities may help you alleviate or redirect those activities as well. So I don't want to go into too much more, but basically, if we take what we said last time, you have your signals, you practice your signals, you practice your context trading within a certain context, and you review, and this is what I'm doing. You try to get those with the intention of hitting either a very high win ratio or a very nice profit factor, right? They're kind of interchangeable. I just talk about win ratio. Win ratio is probably a little better than profit factor because it's going to allow you to use position sizing techniques to scale your trading up. But if you have to take a very low risk on a trade and you have a very high profit factor, that's fine too. It's just a measure of trade quality. Now, once what I'm seeing here is I want to develop out more signals so I can, so I'm not looking through just one prism. And then the next step is to start to look to apply those same types of signals to multiple markets, because right now the opportunity is very immense. We see the market is just moving a tremendous amount, so there's plenty of opportunity. Yes, that historically is not always the case, and so the next step is, once you've built out your signals, your setups, you've practiced them, you're hitting your win ratio, is to start to expand that to a couple more markets. I do believe in being a specialist in one or two markets. However, I believe in being a near specialist, because if you just specialize in the ES, I've seen it go flat and dead for years at a time. So having the ability to create the NASDAQ, crude oil, some other markets would give you a longevity, because we've just seen this with the ES. It goes dead many years. It's done this for many years, or not provided good trading opportunities as it is now. The trading opportunities are clearly exceptional. But we can't, as part of my plan, I'm not planning for that to continue necessarily indefinitely. So as I build up more setups, I figure ES will always be my primary. But the next step is to take those same signals, apply them to more markets, so that you can find those high quality trades in those markets. So it's in some ways it's kind of similar to how you'd build out an automated type of a portfolio. Yet it's not nearly. We don't need to be nearly as broad. And we want more signals that occur every day, or so that we can train and practice on. We want more signals. Whereas with automated trading, you want to be, because you don't have the confidence of the back test, you want to be more selective. And so it would be uncommon to have a less common to have a automated strategy that trades every day when you can make it more selective. So those are some of the differences in the automated versus the discretionary approach or the hybrid approach, in that you're building out a little broader with the strategies. But anyway, so that's that for this blog post. Basically, understand the why you're doing something will help to clarify, and then focus in on that reason. Don't ignore it, right? If you're saying, hey, I like the ability to have, when I place a trade, I like that ability to have my personal bias in that trade. That's a valid reason, but we need to improve that. We need to it needs to be borne out in the statistics, so to speak, if it is a valid reason, right? And certainly some people don't like automated trading because there is no input, there's no bias, no input. And I've kind of gotten to the point where that's not a problem for me because I can program in my strategies well enough, but I still like the ability to add some value through the discretionary approach. So, and that is kind of the whys that add value, and also to have that confidence and be able to execute. And for that to be true, though, I've got to be able to do that. I've got to be able to demonstrate that and be honest about it, because sometimes we know we're confident in trade and it doesn't, and it doesn't work out. We need to be able to recognize those cases to the extent possible. So that's all for now.